It finally happened. Everyone thought that the Fed is bluffing and it wouldn't raise rates, because at this point it was clear that raising rates will only create a recession. The world is still suffering from the pandemic. Entire cities in China are on a lockdown, which is causing a shortage of products in the market. The Fed was willing to swallow an 8% inflation instead of stopping the economic wheel. However, the absolute opposite has happened. No one expected the Fed to raise the rates by 0.5%. It is the biggest spike in 22 years. The only reason that it probably did that is that inflation was seriously getting out of hand. Inflation is not a joke. Take a look at countries who did not take inflation seriously. They have destroyed their economies, from Weimar Republic in 1920s to Venezuela in 2013. But the worst one was in Hungary in 1946, right after the Second World War. At some point, inflation reached 13.6 quadrillion %. That's a lot of zeros. Prices doubled every 15.6 hours. Imagine your Starbucks coffee more than doubles every morning. How would you set prices, salaries, or taxes? The economy stops functioning. People lose faith in the currency. They start bartering, exchanging goods for goods, since no one knows how much the currency would be worth tomorrow. If you owned a business, would you sell candy for $1 or $2? How do you save money? There are millions of questions that need to be answered. Your savings by the next day would lose half of their value. I mean, if an 8% inflation rate already caused such a big problem, what do you think happens if we have a higher inflation? Imagine what happened if it's just over 100%, leave alone with so many zeros. During the height of hyperinflation, Hungary's highest denomination bill was 100 quintillion pengo, compared to 1940's highest denomination, 1,000 pengos. So it's far better to have a short recession than let inflation get out of hand. The question is, why raising rates is so important? You see, the modern economy is entirely based on debt. The Fed has absolute authority over the economy since it's the source of the dollar. It creates the dollar and lends it to financial institutions such as banks, and then the banks would lend them to businesses or individuals in forms of mortgages or student loans. The moment the Fed raises rates, banks will have to raise their rates as well, which will make borrowing money more expensive, which means fewer people will be able to borrow money. With a $50,000 salary, you're eligible for a much bigger loan if interest rates are 3% than at 6%. Which means when interest rates are raised, less money will flow into the economy, which will slow down the economy, and vice versa. The economy goes through cycles. It starts with an expansion period, keeps growing until it peaks somewhere at the top, and then slowly starts cooling down, and eventually falls into a recession, and even a depression in some cases when the recession lasts too long. Once it reaches its bottom line, it starts growing again. It returns back to the expansion period until it peaks again, and the same cycle happens over and over. What matters is if the cycle overall keeps moving upward. A year before the pandemic, the economy has reached its peak. It was just waiting for something to pull it into a recession, which was the pandemic. In fact, it was the longest economic expansion in the history of the US. The last recession wasn't as bad as it could possibly be, since the Fed went beyond its limits by throwing literally trillions of dollars into the economy. The only downside was that we quickly got out of the crisis and have reached the peak again, since inflation now is growing faster than the economy. Haven't you seen how asset prices such as stocks, houses, or even crypto rose so dramatically in such a short period of time? The last 2 years were absolutely heaven for crypto and tech stocks. I mean, some stocks doubled over such a short period of time. And how do we know we have reached the peak? Inflation is growing faster than the economy and getting out of hand. That's why the Fed raised the rates in the first place. 0.75% isn't really super high, since back in 2019, when the economy reached its peak, the Fed raised the rate to 2.4%. So what is going to happen over the course of the next couple of years is that the Fed will most likely keep raising rates to stabilize the economy. I guess such an aggressive action from the Fed was to let everyone know that the Fed is ready to take any necessary action to slow down inflation and isn't bluffing, since most people were confident that it wouldn't dare to do so. And now the question is, how will that impact the stock market, real estate, or crypto? The answer is simple and straightforward. A rise in interest rates will reduce the demand, which will inevitably lead prices to fall. Bitcoin is already down by over 9% at the time of this script. It might fall further by the time the video is out. The S&P is down by 4% and the Dow by 3.4%. That doesn't mean they will keep falling, but there is definitely going to be less money flowing into volatile assets such as crypto or tech stocks. The stocks that seem like they are going to shoot to the moon will begin to slowly slow down, and the companies that's supposed to go bankrupt during the pandemic will finally face the reality where they will have to grow without the Fed's cheap money. So it's absolutely normal to see some stocks to dwindle. Will that stop inflation? Well, the answer is both yes and no. First of all, that is for sure is going to impact house prices, for example. Just imagine for a moment what is going to happen to mortgage rates. They are going to be so expensive that people would rather choose to rent than buy, which means prices will begin to fall. How much they will fall is remain to be seen. But a housing crisis to a certain degree is possible. However, with such a shortage of houses in the market, no one really knows what to expect. But at the same time, not all inflation is a result of Fed's action. The 0.5% increase in rates isn't going to bring down gas prices, since they're mostly settled by OPEC, an organization of exporting petroleum countries that control the demand and supply of oil in the market. And the war in Ukraine, of course, that is creating a scarcity in the market, which is leading to such high gas prices, which are causing inflation worldwide. But what worries me the most is that it is going to lead to a recession. The pandemic crashed supply chains, destroyed what companies have been building for decades, and now higher rates mean these companies will have fewer resources to restore what they have been building. When the budget shrinks, companies will have to cut expenses, which can easily lead to higher unemployment, since wages are the biggest expense for most companies. The consequences aren't going to be clear immediately. It is going to take some time, because a 0.75% isn't 5.25% like it was in 2007. It is easy to criticize the Fed, but it's not easy to manage such a crisis. On one side, we just got out of the pandemic that is not over yet. On the other side, there is an entire war taking place in Europe, which is causing oil prices to shoot to the moon, that is raising prices for everything from the cost of driving your car to your groceries.